Hi, I'm Mary Wisniewski, and I'm the banking editor with Bankrate, and I cover fintech. And I'm so pleased to welcome everyone to this panel on the future of financial health. It's mattered forever, but in this time, I mean, this is wild, this is crazy, and it's horrible. We have, vanishing incomes. We have like so many inequalities going on, and it's just such a nuanced problem. And that also means there's a lot of opportunities. So we have great panelists today from different perspectives, from the tech side of things, from the policy side of things. So it should be a great chat. And I'll quickly introduce everyone. We have Lawrence Bailey, who's the head of national sales and community and business development at JPMorgan Chase. We have Darlene Goins, the senior vice president and head of financial health of Philanthropy at Wells Fargo. We have Gigi, Hyland, the executive director at the National Credit Union Foundation. And we have Tim Spence, the executive vice president and head of consumer banking, payments, and strategy at Fifth Third. So there's so much to unpack here, but I think we should start about the inequalities that are going on. We saw a few weeks ago that the personal savings rate hit a high at 33%, and yet that's not true of everyone or everywhere. And I thought maybe we could start this conversation unpacking some of these nuances and just how this is affecting people in different ways. So Lawrence, I hope to start with you about, on one hand, we have this, savings rate is high in theory, but, let's dig a little deeper. What are you seeing? What's going on here?
Yeah, that's a good first question. And let me start by thanking you for having all of us. I know we're excited to have the conversation today that we're about to have. And yeah, you see a lot of statistics. I saw the same statistic around the increase in savings. We just put out a report that showed about 35% increase in savings. But as you mentioned, that's a very different story for different people. So first of all, the two things that are driving that are the stimulus money that's being put into the system, and then the increase in unemployment benefits. But that's driving that specifically for what we call the low to moderate income families in terms of the savings rates. And the question is that sustainable? And I would say that it's not, because you can't continue to put that kind of investment, whether it's stimulus or unemployment, it's not going to continue. So that's inflating the savings rates. On the wealthier side, the savings rates being inflated by the simple fact that we're spending less. There's less places to go. We're at home. We're not shopping. We're not buying the big ticket items that we typically buy. We're not traveling. So unfortunately and fortunately for the wealthy, that savings is sustainable because it's teaching us, new habits. And there's only so many things we can order online. At some point, you run out of things and you start to look for what else can I order, and you're just out of things. So the sad thing and then the opportunity for all of us in fintech, banking, across the spectrum of financial services is what do we do to help those low to moderate income families? What tools, what education, what are the things that we can all do part of the community to make sure we help them? So there is a path post this government, intake of all the money. What can we do to help those folks? And that's the challenge in the conversation we're going to have today around what are we all thinking? How are we thinking we can really have a sustainable impact for those families? I know at our firm, we're thinking about things like savings. We're thinking about things like the right products. And we're always thinking about education. But you have to have the products and services to go with education. That's an old trick that's been used. You educate, but you still need access to services, whether it's through fintech or whether it's through the retail perspective, from a banking perspective. So that's just how we're thinking about that. But it's truly, Mary, a big impact that's really we see for the low to moderate income families that I don't think the savings rate is sustainable.
Yeah. So, that's really, helpful to understand. Thank you for that. And I wanted to, before we talk more about those solutions or possible solutions, Darlene, I thought it'd be interesting if you shared what you've been hearing on the ground floor of what are some of the thorniest issues facing, people struggling the most right now? What are you hearing?
Sure. What we're hearing from our philanthropic partners and nonprofits, our grantees on the ground, is that cash in hand is so critical right now, especially for vulnerable communities. People need cash for rent, food, utilities, childcare, other basic needs. And during this time of high anxiety, stress, and uncertainty, people just need help. They don't want to, nor should they have to, try to navigate these financial challenges alone. We're hearing that the hardest hit communities are communities of color who often lack liquid assets, people with disabilities who may have lost their personal assistance services and jobs and who worry about how the stimulus checks might impact means-tested eligibility for public benefits. We're hearing about immigrant families who don't have the luxuries of paid sick leave and access to unemployment benefits or social safety net protections that can help them weather the storm. People who are unbanked and underbanked who may still be waiting for their stimulus payment because they didn't have a bank account on file with the IRS. And then something we heard about yesterday in one of the sessions, there are seniors that were already aging into financial insecurity due to longer lifespans and the disappearance of defined benefit pensions. And so, there are some vulnerable communities that are really struggling, and, cash and help navigating these financial challenges is so critical right now.
So, possibilities are endless in terms of financial health. We dialed into a lot. Tim or Gigi, are there any things that you've noticed from people that you'd like to add onto that list that we were talking about?
Sure. So I think there are a few things. I agree very much with the prior comments, but I think they're probably the two things that are worth adding are, one, this crisis, the nature of this crisis, has had a huge impact on the unbanked, right? It's easy to forget that almost 1 in 5 U.S. citizens still qualifies as underbanked. And it's pretty difficult to buy something online if you don't have access to a payment card. It's very difficult to get your stimulus check if you don't have a direct deposit, a piece of direct deposit information on file at the IRS. And many of the communities that we're talking about are also communities that are not served by any regulated depository institution, whether that's a bank, a savings bank, or a credit union. And the byproduct of that is even the access points are really limited for them. So I think we have worried a lot about the role that we could play in helping the unbanked population to navigate what is a crisis that was almost tailor-made to hurt them. I think that's one point. I think the second thing that we have thought a lot about, and that I think is important in particular as we talk about where we head from here, is we're adaptable. Human beings are adaptable. We're adaptable people. And I think many of us are either accustomed to living with abundance or we're accustomed to living with scarcity, and we know how to do those things. What's very difficult is to take folks that are living with scarcity and all of a sudden to put them in a situation where they have abundance, which many people with the advent of the stimulus checks and the enhanced unemployment, like Lawrence mentioned, have had to make the transition to experiencing. And conversely, if you're somebody who's accustomed to living in abundance and all of a sudden you have to live in scarcity, it's a very difficult transition to make. So the things that we can do to help people psychologically and behaviorally to navigate those major shifts in their financial circumstances, we think is also a very important part of the way that we respond to the pandemic.
Yeah, I would echo all of those comments. I think that's a great summary of where we are. I think what's hard is the path forward, knowing that this crisis is very different from the last crisis, the Great Recession, that this is an income issue. This is the world stopping for 3 months and people all of a sudden losing their sources of income. And then, as was just noted, having then this influx of whether it's stimulus checks or unemployment benefits and how to navigate those things. So I think as institutions think about this, we are all doing probably skip a pay and forbearance and a variety of other mechanisms to try to help people with their cash flow. But that can only last for so long. And I know, I think the other challenge is as regulated financial institutions, there's a real conversation that has to happen with the regulatory community to not necessarily treat this the same as they did the Great Recession, because the issue is under nobody's fault. They can't pay because there's no income coming in the door, and everybody is in that situation. And so how is a credit union or bank supposed to allow forbearance potentially for 180 days or more, depending upon how long the crisis lasts, and not have on the back end a negative regulatory kind of rebound effect that doesn't allow them to actually serve the people that most need service. So I think that's the other twist that I would add as we look forward, that's going to be a very interesting dance as we go forward.
is an interesting dance. And Gigi, you raise up another point about fees. There are breaks right now. And, over the years, banks get blasted all the time for the fee model that they charge consumers. And now you have this period where there's a break. This came up, I think, in Jennifer's chat right before. But what do you will banks go back to a fee model? Is this going to change it in some way? Do you think, what are you feeling about the fee model and the temporary breaks?
I think that's a really great question. I can only answer or try to give an answer from the credit union perspective, but I think it's really going to be challenging to try to figure out how you go back to non-sufficient funds, NSF fees, or other fees that may have been part of sort of your return on assets in a time when you've been able to not have those because of the circumstances. So to your point about opportunity and crisis, what is that opportunity then around either contactless or digital that perhaps could drive more fee income, but also can meet the member, in our case, the credit union member, where they are in life. So I don't have a really good answer to that question, but I'm having trouble kind of seeing through the fog of whether we could actually go back exactly to the way it was, because the world is not going to be the same way that it was.
Right. I know. And it's so hard to know what habits will stick and what habits won't stick. But I think another interesting wrinkle to all of this is that, on one hand, there's always been this assumption that like mobile banking can reach a wider audience, but it's been, coming up a little bit more like, what about for the person who can't pay Wi-Fi and can't go to the public library? And also, maybe the phone is an older model and can't support the most recent app that in theory is supposed to support. What can we do here? Do we know?
Hey, Mary, I'll chime in on that. I think it's a good conversation. I think what Tim was saying earlier, though, I think we'll navigate going forward how that looks and the balance. But I think the core thing that really has evidenced itself in this pandemic, which quite frankly should not surprise me, I'm sure, to most of the people in the audience, given the audience, is the behaviors that put people in the situation they're at today. So when you think about like, how do we teach them how to budget? How do we teach them how to save, which is really a big anchor when you see the lack of savings, and that stat that I continue to sits in my mind that 42% of Americans don't have $400 in savings. That stat we all hear and it blares in my ear. But then you anchor on, okay, how do we make sure that going forward, they have the education on how to budget, they have a plan and the tools to save, and then we lower the access and the barriers to get into banking. That's a key point that Tim mentioned as well, lowering the barriers to get into mainstream banking at the right point, because in turn, that does allow you to have lower fees, if not zero fees, depending on the right products. It allows you, when you think about the education on budgeting savings, to avoid some of the pitfalls with NSF and OD. And we talk to a lot of our clients, and that's what they're telling us. Like, today it might be late because they're in this environment, but let's just make sure that we're going forward, we have a plan, because I don't care if it's pandemic, natural disasters, unemployment trends, businesses moving in and out of places. The low to moderate income community, as Gwen mentioned, are always hit the hardest. So that's where I think about all the things that we can do, and the conversations we continue to have are the right ones, and you're asking the right questions, Mary.
And you're opening it up. Mm-hmm.
If I can jump in, then, because I agree, I think that we need to do more around providing access to banking, but I also think that as an industry, we have really looked at financial health from a purely financial perspective, encouraging people to save more and reduce debt and build credit. But we haven't done such a good job of really considering the full context within which they're making those financial decisions. So their housing situation, health, employment situation, diversity dimensions, social circumstances, and that context is influenced by policy and regulation. And that's influenced by oftentimes very false and damaging narratives. And so I think that we now have an opportunity, I think to Gigi's point earlier, to sort of reimagine what our society should look like and try to influence the policies and regulations and those narratives so that we can provide a better context within which people can make financial decisions.
And I think I think to build on Darlene's point, I think part of that too is there's a great deal of need for empathy of all of our financial services professionals. Is really whether it's walking in the shoes of another, or truly understanding, to Darlene's point, that context, that we make judgments about how people decide their finances, and as an example, whether they go to a payday lender or not, or a title lender or another predatory lender, and not having the context of why that decision is being made in the life that person is currently leading is a dangerous assumption. And that in itself is a barrier to those people coming, I think, to regulated financial institutions, because it's, you don't get me. You don't understand what I have to deal with and when I have to bank and how I have to bank and why I'm doing this. I think that empathy conversation is really important. It's a conversation that we are definitely fostering in the credit union space, even though, we're not-for-profit and mission-oriented by charter. It's still a really important conversation for the financial professionals to be able to have that understanding in order to meet the person where he or she is with the right products and services, as my colleagues have said.
And I think that's such an important point. Now, Gigi, illustrate that for us. What would be an example that you would love to see, like a bank, like here's this person, here's how one might want to think about the scenario, expressing that empathy. Is there a concrete example you'd think of?
Yeah, sure. I think the example of, using a payday lender or a check casher and really not understanding the options that somebody might have based on a previous credit history. So, if I'm a young person and I have a whole bunch of credit cards that I decide to run up, I get in a lot of trouble with those credit cards. All of a sudden, my credit score is really abysmal. And really my only opportunity to do banking is with alternative service providers. And yet a traditional financial institution, credit union or bank, might judge me as, well, why didn't you just come to us? Well, you wouldn't let me in the door. So, and that it's that empathetic, how do you help people when maybe they have really bad credit or underserved or fearful from a cultural perspective? I've got a great story from a credit union in Indiana who's working with the Hispanic population, seeing a woman come in and cash really large checks. And she was doing that for her Hispanic community. And the credit union was like, how can this be in our community? Why aren't they using us? And, going down that path of empathetically trying to understand why they weren't using us and trying to find a way to fix that. So it's that context, I think, is everything. So hopefully that's a good example. I'm sure my colleagues have others that they've seen. So please, yeah.
I want Tim or Lawrence,
Yeah.
Sure. I'll take the bait on that one. I really think that it starts with being present. And I think that that's a topic that, as an industry, in particular, as many of us look at our branch networks and look at changes in customer behavior, that we're really going to have to grapple with. Because the reality is, for the segments of the population that most need the support of financial institutions, whether they're banks or credit unions, getting support and getting advice is still very much an in-person experience. So I think that's the starting point, is making sure that we find ways to be present and be relevant in all of the communities that we serve across the markets in our respective footprints. I think secondarily then, it starts with, I think it was a point that Lawrence made earlier, which is meeting people where they are. So it doesn't make a lot of sense to spend time talking to somebody about banking fees if the issue that they're running into is they don't have enough income to support their regular expenses. The starting point in that scenario is an understanding of what your regular expenses are, and then doing what we can as an institution to provide advice on the best path to meeting those expenses. So I think you have to be present to begin with, and then you have to be relevant. You have to be willing to meet people where they are, as opposed to starting with the products and services you have available and trying to fit people into them.
Lawrence, did you want to add anything to that?
No, I was actually agreeing, which is why I love this panel, and I know we spent some time together. But I think that what Tim and Gigi have said is spot on, and I would just anchor on meeting the people where they are. I think there's a balance, and we've seen that shift from a digital shift to a brick and mortar shift. And as you think about going forward, right now, we didn't really have a choice to shift to the digital experience because of the pandemic. But we're also making sure that we don't go too far, because there is people, to your point, Mary, who might not want to bank digitally, might not be able to bank digitally, and still need to have that brick and mortar. So I just anchor on what I kept hearing from my peers, which is meet them where they are, make sure that we have access. And then again, lowering the barriers, which is what you hear, lowering the barriers to these products. And then I also love what you said too, Gigi, as well, as Gwen said it too, which is you got to go a step before that. And that's that step before that, which is I get it, but I need help back here. So it's so many things that we need to do from a community perspective, from a nonprofit perspective, a government perspective, and a financial services perspective. We need all of these kind of entities to work together because the problem is and has been a little bit bigger than just one of us.
Yeah, there are so many, there are just so many threads to pull on here. Two things I wanted to dial in for sure while we're still chatting is promising technology. I did bring up it's not, well, there's no silver bullet for anything. That's just life. But I mean, any kind of promising technology in the context of banking that you think can help, I guess from my perspective, it's always been focused on helping people change their habits. But now we're dealing with bigger factors here. Again, vanishing income. It's not a useful tool for someone who doesn't have income. But are you bullish on any technologies that you think can help, improve someone's financial health in any capacity, to pay down debt, to build up savings, or anything on your radar right now or that you're exploring as part of this solution?
Maybe I'll start on that one. I think we're at a very exciting point in time because technology allows us to interact with people in a much more intimate way on an ongoing basis. I know we talked a little bit about saving. The experience you had at a financial institution 25, 30 years ago involved a physical passbook and a savings account that paid an interest rate. And those two things aren't that useful if the issue you have in achieving a savings goal is establishing a budget and finding small ways to move money into the account on an ongoing basis. And technology allows us to do those things. I also think technology allows us to give people much greater visibility into their spending patterns and behaviors. And those things are the key. That's the initial step. Understanding where you're spending your money today is the initial step to establishing a budget and to moving from a model where you are borrowing to cover regular and recurring expenses to one where you're saving in advance and you're in a position that you can handle unexpected events. I think the third thing that's really exciting in the context of the current pandemic is technology is allowing people to do income discovery in ways that maybe they never have been able to do before. We announced earlier this week a partnership with a tech company called Steady as a mobile app that with very few limited pieces of information helps you to understand based on the number of hours you have per week available, when those hours are available, and what skills you have, the best ways for you to generate income with your spare time. And then they do the connecting for you, whether it is gig economy work or more permanent work or otherwise, so that you can get yourself signed up, enrolled, have the background check completed, and start making income in relatively short order. Those are just things that weren't possible when we had to go to the classified section of the newspaper on Sundays to do income discovery. So I think across the spectrum in terms of improving financial health, technology offers a really important tool. We just all have to recognize that you put the technology out there, people don't automatically figure out how to find it and use it. So it will, we firmly believe, still require coaching and advice and support along the way.
I would build on that. The foundation was privileged to work with the Financial Health Network and Members Development Company, which is a credit union-owned organization, around 5 promising technologies last year, and did some research on that. And one of the ones that just really caught my eye is augmented reality and virtual reality. There are great statistics that say that we can't even remotely imagine ourselves in 20 years. We don't know that person. That person's a stranger to us. And so if you think about that and using ARVR to help people be able to literally see, in quotes, the potential choices that they make and the consequences of those choices vis-a-vis their financial health and well-being, whether, rent to own at this stage of my life, or do I really need a car? Can I use public transportation? And just, is there a way to leverage that technology, which I think throws a little bit of fun into the mix, because budgeting is just such a lovely, engaging topic for most of us. How do you make it very real and leverage all of our fascination with YouTube and watching videos and people dancing in quarantine. How do you leverage technology in a way that for people, financial health is very real and they can do it? It can be empowering. And so for me, ARVR is really kind of inspiring. It feels very Trekky, but it's how do you see your financial future in a way that you can make better decisions right now? So that's one I would throw out there for consideration.
Oh, I love that one because yeah, budgets are dreadful for sure, regardless of like your income. They're just awful. Very depressing experience personally. But this is a related question, and I feel like it's a good tie-in maybe for Lawrence. It's still to the technology. Well, it could be broader than that. But audience question is, what are banks and credit unions doing to make it easier to implement what consumers already know what they should do? So budgeting, emergency savings. So it's basically like, for those consumers who know these are best practices, but the behaviors aren't doing that. What are you seeing, Lawrence?
I think it's a good question. I can just tell you what we're doing, but I do think the reason why I love the banking industry is because I hate the word, but it is a copycat kind of industry. So, and it's a good thing because we're trying to help more consumers. It's not about competition. It's about how many consumers can we help. So it's okay if we have some of the same ideas, but from our space and from our perspective, the financial technology space is one we're playing a lot in. The budget tool that we're literally piloting right now is an aggregation tool where it aggregates all of your spend across any of the places. I don't care where you're spending, subscriptions, monthly spend. It tells you what you're doing, so at least you have evidence and you can see, okay, oh wow, I didn't realize I still was paying, that monthly fee for that same kind of music services. I didn't realize I was doing these things. So the aggregation of all your budget into one place, and then the AI stuff, which I'm laughing as well, the AI technology that starts to say like, hey, I see these trends. Here's some things that you might want to do differently. And then you're not only showing that, but you're giving some advice at the same time, right? And you have the AI opportunity, but then you have the opportunity, if this is not helping, you can actually talk to a banker. So I think that's a tool too. For us also in terms of the savings, which we're really anchored on too, in terms of auto save, but now you get into, we have an auto save feature where you can save it from any place where you don't see it. It just takes money and it pulls it in on a daily basis even. You can save $1 a day even, or you can save $2 a week. So you can kind of do that, but you can specifically say, I am saving for X. So now having tools to say, I want to save for education, I want to save for school, rainy day fund. So having that ability to see that all in your mobile app is critical. And then last but not least, how do we get to our youth? Which I was hoping we'd have this conversation. And when you think about what's happening today, we have a keen focus on the youth, not only just in a product that we're playing around with, a product for the youth, but also the education of the youth. And how do we get them educated, but also give them some products at a very young age? Because as we know, I watched my 11-year-old nephew teaching my 100-year-old grandmother how to use technology, and literally. So at that point, they're sucking in the information. So why not give them some financial service tools, let them start banking at a younger age? So when they get to that point, you don't have the same challenges around, I don't know how to budget, I don't know how to save, I don't know how to spend. So we're kind of anchored in that too. I know it's a long-winded answer, but that's kind of how we're thinking about it from kind of A to Z.
Give you an amen on that, reach the youth one. That's awesome. Yeah, absolutely. Oops, you're muted.
I
think you're on mute.
My dog was barking. I was trying to hide. Yeah, Darlene, I wanted to dial into you on that subject too, because I know it's something you mentioned on our pre-chat about, this, I know I grew up without any financial education. I just stumbled through it. I know as an industry, we're more bullish on just simplifying things and as a more promising area. But what do you think from the financial literacy standpoint? Where does it start? What are you looking to?
Sure. There are only 21 states in the country that require personal finance to be taught in school, and even fewer that require some kind of an exam that you have to pass. So we are, I think, doing our youth a disservice in sending them into adulthood without the tools to be able to make very complex financial decisions. And so, at Wells Fargo, we have our Hands-on Banking program, which is a free financial education program. We just launched a new Hands-on Banking for Youth digital learning center that has tons of interactive opportunities for youth to learn, youth from as young as kindergarten, where you're just sort of teaching about needs versus wants and delayed gratification so that they can start to understand the concept of saving for something in the future, all the way up to high school and understanding credit, because they're going to have to make some complex decisions about student loans if they're thinking about going into higher education. So it's definitely so critical that we prepare our youth for their financial futures and really to own their financial futures so that hopefully we can stop the pipeline of people that are moving into adulthood ill-equipped to actively participate in the economy.
Yeah. And this is a big transition, but it just reminds me of the other things we've been talking about, and that's on the policy front. And you had mentioned also about stimulus checks and how that might open the door for rethinking policy. Let's dial into that a bit more. I mean, what is that opportunity exactly?
Sure. We've talked a lot about, what do you do with people that just lack income? And I think that, for a long time, things like direct cash assistance have met a lot of resistance when we've talked about incorporating that into our social safety net. But we saw the positive impact that the stimulus has had on tens of millions of people, where we didn't have to make people jump through a lot of hoops to gain access to that cash. We didn't put parameters around how they had to spend that cash. So I think, this pandemic is devastating to so many people, health-wise and financial-wise. But I think that this is also an opportunity for us to re-examine and evaluate our policies. And, maybe there is a place for direct cash assistance as a part of our social safety net so that we can improve the financial stability of vulnerable families and get them on the right track to living a financially healthy life.
So we've presented a lot of ideas here: technology, policy, regulation. I mean, that's a lot. So I know we're running low on time. So I wanted to say, or ask rather, what do you think needs to, and round robin, so pressure's on everybody, but what needs to be in place by the next recession? What would you like? What would be like one or two tangible things you think, yes, this is, let's go, from a bank and credit union perspective to help financial health?
Okay, you want to go first?
I was going to Gigi.
Go ahead, Gigi.
Okay, sure. We're all looking at each other. You go.
You're first.
So, I think Lawrence hit on it. That statistic that we all cite of, 42, maybe not 39% of us not being able to come up with $400, or 78% of us living paycheck to paycheck. If everybody in this country could have a safety net of some amount, whatever that amount is, if it's 400 or otherwise, but a cushion so that they have slack when life happens, as life has happened to us all over the last 3 months. That's a very small win. And then I would echo what Darlene said: look at policy and change it. This is the time to change it. And cash assistance, there's proof that it works. Why not? So,
I think if there's the thing that it's very hard to predict what the cause of the next crisis will be, right? I don't think any of us, as we came out of the financial crisis, expected that the next time that the economy would tip from expansion to recession, it would be triggered by a global health pandemic. So I think it's difficult to know what solution will prevent the next downturn or people from suffering. But I think what we need is a better response engine. With the technology that we have made available in the banking system to the country, whether that's the card payment networks or the real-time payment system now or otherwise, you would think that there would be a more efficient way than mailing paper checks out or utilizing a loan guarantee engine that, the SBA is to be commended for what they managed to accomplish, because they underwrote something on the order of 20 times the volume in 1/6 the amount of time that they're accustomed to doing. So I would like to see the partnership between the federal government and the state governments and the banking system in crafting response engines that allow us to get money into the hands of people who need it much faster, leveraging modern technology and not the check printing press.
I would. Oh, sorry. I would echo the comments of my fellow panelists, and then I'd like to also see changed narratives to Gigi's point, having empathy for the struggles that people do face from a root cause perspective. I'd love to see banks really adding a racial equity lens to our work, whether it's in terms of how we're developing products and services or our philanthropic investments. And I'd love to see the birth of new types of fintechs that focus on removing systemic barriers to good financial health and maybe take friction out of the system.
And I'll go last but not least. To put a bow, I agree with absolutely everything. The way I'm thinking about it is just to put a bow on what you guys said, which is we need a cohesive strategy, a coherent strategy. Quite frankly, that includes our government, but also includes fintech companies, banks, and the communities. And if we don't have that cohesive, coherent strategy in place that's already running, it's just going to be too late. We'll have these same conversations again, but that strategy involves all of us. As I said, this is a community and a family. It has to be cohesive, has to be coherent, and we have to all buy into it. And all the things you said are in play. Education, financial literacy, savings is a big anchor, whether it's saving $400 or whether it's, a different lot in life where you need to have 6 months of savings for something else. It just depends on where you are. But all those things from my perspective are critical, or otherwise we'll be having these same conversations. But I am optimistic right now that I see change and I feel change, and I hope you do too.
One thing I have noticed from different apps, different personal finance apps, different fintech apps is like even the savings goals have changed. Of course, less traveling. So it's more about like, oh, I'm building an emergency. It's like, it's a subject of interest, of necessity. So it's interesting to see how that renewed interest might play out. And with that, we're out of time, which is too bad. So I just want to thank the panelists for being here. I know we all kind of are like-minded in what we want to, the end goal here, but it's a very interesting conversation about the different ideas of ways to solve pockets of these pervasive problems. So thank you, everyone.
Thank you.
Thank you.
Thank you.
Thank you.